All right, Matt, it's a very busy morning for you, getting an early start. I want to talk to you about some of the president's comments yesterday. The president saying, at least when it comes to China, he's open to a deal. Does this idea of a deal-making president, does that change your view on emerging markets?
Look, I think it's short-term noise, and that's what we've been dealing with all week and even through the weekend, just constant nervousness from the marketplace, although it's been very orderly when we've seen the markets, even though the markets have been pressured. I think it's more about thinking about what Trump is trying to do here. If you look at Trump, what has he said? He wants rates lower. He wants the 10-year lower. He also wants this tax bill done. So this is putting a lot of pressure on the market and others to really get things done. So I think negotiation on tariffs is one thing, but it's only part of a bigger picture. All
right, so it's only part of it's interesting that you're saying that it's been orderly. I feel like it's been chaos, but we want to focus on what we really have you here is talk about emerging markets. Today, your bank, Morgan Stanley, coming out saying investors should brace for another 7 to 8% drop in the S&P. Does that make emerging markets more attractive relatively, or do you think money literally goes there, and is there real upside opportunity?
Absolutely, and this started before the tariff discussions also. Into this year, we already started talking to a lot of investors, and we saw the sentiment shifting as we've been traveling around the world. I was in Germany last week. Colleagues were in Canada. There is a sentiment shift that's naturally happening and is going to continue to put pressure on the market. So we're seeing, but if you look at the long-term opportunity for EM, you're seeing everything with industrialization 6.0, that comes out of Asia. You're looking at some of the growth opportunities. You're still seeing reasonably decent growth in places like India and even China, which is the center of the tariff discussions.
So I do have to ask, a lot of expectation for U.S. GDP to decline and the economy to weaken. How does that not hit these other emerging market economies? A lot of them really depend on U.S. consumption for their manufacturing base and other things like that.
Absolutely.
How does the slowdown in the U.S. not hurt the investability of their markets as well?
So I think we need to take it apart. We can't look at just the ETF. All these countries are very different. So you have Taiwan, limit down this morning, really a lot of pressure on that market. Think about all global investors holding TSMC and a lot of those semiconductor names. That's very different than the India market that's already seen a bit of a correction this year. Lower oil price is going to help them. They've been covered a little bit here, less pressure on the market, and also very domestic demand driven. So you have very different markets here, and that's where that active management is going to make all the difference in terms of where you want your allocation.
All right, so tell me, are you saying it's an individual stock per country situation? Because you're saying get away from the ETFs.
Absolutely.
So is there a theme at least? Is it India manufacturing? Is it Chinese internet? Is there a theme that investors should look to, at least for the potentially best opportunities?
Yeah, if you're thinking about long-term growth and long-term GDP, it is going to be that India story. There's a lot of different stories happening in India there. The industrialization story, we've already been talking about it this year, the China 3.0, the robotics, some of the automation, EV cars, that's still all coming out of China. I think also if you look at, we've been talking a lot about auto manufacturers in the U.S., all of those components are still coming out of much of North Asia. So you do have those opportunities across Asia that you just have to be selective about.
So you're clearly an optimist, Amy, because you're seeing the bright side when it comes to everything. Give us the downside. Give us very quickly one area that's going to be specifically hit hard in the near to medium term.
Sure. So I think the one thing, short-term pressure is going to be on. I think one of the things that Trump wants is he wants to clear out this market, understand where the risks are, understand where any of the weaknesses are. That's going to be something we're going to be watching very closely.
Well, give us a country or a sector. Is it, I don't know, Vietnamese manufacturing? I mean, give us something that you think is going to be especially hit hard, because tariffs can't be a rising tide lifting every emerging market.
No, 100%. I think Taiwan is going to be hit hard because that's directly connected to that U.S. market and the U.S. growth. So I think that's where we need to be careful of.